Welcome back to my final daily report market analysis video with me, Richard Perry, market analyst at Hantec on Wednesday, the 18th of March. Let's have a look at this gold chart. And gold has had this sharp correction, obviously, over the past week and a half. Signs potentially of support starting to come in. I talked in the morning report about the fact that we've held on to that 1445 level of support from that November low. It attacked it on Monday, held on a incredibly volatile session, held into the close by a significant amount actually, and then it had another go initially early morning yesterday, but again started to find the buyers coming in between 1450 and 1500 bucks, and again closing above the level of the 76.4% fib at 1506. So is this starting to turn around, actually? That would be the question. Now, nothing really yet on momentum indicators, and I don't think the daily momentum indicators are where you're going to find the recovery. Be on the hourly chart where you start to see more considerable moves in a recovery scenario. And what you have had is this run of higher lows now, a higher low and a higher high. 1519 was a breakout point, and that again, as the market has found support at 1487 today, and the market's ticked up in the past hour or so, started to find that sort of turnaround point. We're starting to find that maybe higher lows are a possibility. You've got that coming through on the RSI, on the hourly. Look at the MACD lines. They went above neutral, but starting to sort of bottom out around that neutral point. Stochastics are ready to turn up again. They've done this on the last 2 days. So is this a point at which we start to see the market trading higher again? Above 1519 on the hourly chart, I think is an important level, because again, that was the breakout from the first reaction high, and became a pivot line yesterday, overnight. And again, if we can hold back above 1519, we can start to think about the possibility of a recovery. Now, 1552 was the rebound high. 1553 rebound high yesterday. 1551 was an old low. So it's at a pivot line around that sort of area. And again, we can gauge that as a bit of a moment, I think, in the market. So if you can see the recovery initially above 1519 this morning or this afternoon, and then on a move back above 1551, you could start to see the acceleration of a really strong positive move from the bulls. You've already had one positive candle yesterday. Again, if you start to see another positive candle or more positive candles forming, you could suggest that the selling pressure, the massive sell-off that we've been seeing through gold in the last week and a half, could start to turn a corner again. And yeah, that would be very interesting. So holding above the 76.4% fib of 1506 would be important. Certainly, basically trading around there now, shade below it, but still holding on to that level would be important. And then we're sort of looking at the possibility of forming higher lows and maybe even a recovery, whisper it quietly, but possibly even a recovery on gold. So I wish you good luck in your trading today. You can click here to subscribe to our analysis videos and go to our website to sign up for our webinar.